The purpose of this video is to give you general advice about a W-4 form and taxes. It is not intended as tax advice. For tax advice, please consult a certified professional. When you receive a paycheck from CEO or any other employer that you work for, you will notice that you are not getting 100% of your pay. For example, if you make $10 an hour and you work 10 hours during a pay period, your total earnings are $100, but your paycheck is not for $100 because your employer has taken taxes out, or as it's called, withheld taxes from your paycheck. If we think of this bar as your whole pay, also known as your gross pay, you will see that you will get a large chunk of it represented by this green shape. This can be seen in your paycheck, or this is the amount that will go directly into your bank account if you have direct deposit. Now in this example, let's say the amount you are paid out of your $100 of gross pay is $80. The other part is withheld, which we will represent with this yellow shape. In this example, this amount is $20. Now, this $20 is given to the federal and state governments to pay your federal income tax, Social Security tax, Medicare tax, state income tax, and other state taxes, depending on which state you live in. Now, how does your employer decide how much it should withhold from your paycheck? The answer is that this is what a W-4 form is used for. A W-4 form is typically one of the first things you will get when you start a new job. This is something that you will do for every job you get, not just once a year, but every time you start a new job. Your employer will use the information in the W-4 to make an estimate for how much they should withhold from your paycheck in order to pay your taxes. Now let's look at what an actual W-4 form looks like. The W-4 starts off with a worksheet that helps you decide how many allowances you should claim. The more allowances you claim, the less your employer will withhold from your paychecks. Allowances are for things like the number of children you have, or if you're the head of the household. Again, the more allowances you claim here, the less tax will be withheld from your paycheck. Now, if you claim too many allowances here, you may be underpaying on your taxes. And it's not like you can get away with this. It just means that when it comes time to pay your taxes the following year, you're much more likely to get a bill from the IRS telling that you need to pay them to make up the difference of what you paid throughout the year and what you should have paid throughout the year. Now, the W-4 determines what you pay on a regular basis, but it doesn't change what you actually have to pay in the end. Now, let's look at an example of me filling out my W-4. I'm a single guy without kids, making $40,000 a year. Now the first line, line A, says enter 1 for yourself if no one else can claim you as a dependent. So I'm going to put a 1 here. Now line B says enter 1 if you are single and have only one job, or are married, have only one job and your spouse does not work, or your wages from a second job or your spouse's wages are $1,500 or less. Now I can put a 1 here because I am single and have only one job, but I'm not going to, and I'll tell you why. By claiming fewer allowances, my employer is going to take more taxes out of each of my paychecks, and I'm more likely to receive a tax refund than I am a tax bill. Now this is a personal choice that I've made. You will have to make your own choices. Now, I know that I'm not the best saver, and if I can build in a way that forces me to save, that's just better for me. Now, your situation may be different than mine. Maybe you're a good saver, or maybe you would rather have less tax withheld from your paycheck. Maybe you're married, maybe you have 3 kids. Now, depending on your situation, you will fill this out slightly differently. Now, you'll notice that many of the line items ask about children and people who depend on you. This is because the government is sympathetic to those who have a larger number of people who depend on them, and therefore they think you should pay less tax than someone who has less people depending on them. But remember the general rule: the more allowances you have, the less tax is withheld from your paychecks. Now, once you have read through each line and entered your allowances, add them all up and write that number in the space for line H, shown here. For me, it's easy. Mine's only 1. When you've completed the worksheet portion of the form, we're going to fill out the lower portion. So we're going to give information like we're going to enter our name, social security number, address, whether we are married or single, and then we enter the number from line H, which is the total number of allowances we are claiming, into box 5. Now box 6 is there if you want to add an additional dollar amount that you would like withheld from your paychecks. Box 7 is a space that allows you to claim exempt status. Now, if you want no federal or state income taxes taken out of your paychecks, write exempt here. Lastly, sign and date the form and give it to your employer. Now let's look at a simplified example that will show us 2 different scenarios based on how a person filled out their W-4 form. Let's say that in scenario 1, Randall Smith got a job paying him $50,000 a year. Now if he chose a low number of allowances, his employer would withhold a certain amount from his paychecks to pay taxes over the course of the year. Let's say that number is $5,000. If he claimed more allowances, his employer would take out less taxes out of each of his paychecks, and let's say over the course of the year that number would total to be $3,000. Now at tax time, the following year, the IRS is going to calculate how much tax you should have paid over that year. Now in this example, let's say that your total tax bill for the year ended up being $4,000. So for Randall Smith, the number of allowances he claimed is the difference between getting a refund check of $1,000 from the IRS and getting a bill for $1,000. Now again, this is just a simplified example, but it shows how the number of allowances you claim has implications for your taxes.